Hello, everyone. Welcome back to How to Trade Switch Markets. I'm Shane Vernier, and today we're going to talk about the ORB. We've got a lot of questions today. We've got a new video out on Switch Markets TV, which is the Pine Connector video. Be sure to check that out when you do get a chance. I got a lot of private messages. I'll be sure to get back to those in short order as soon as we are done with the live stream here. But today we're going to be talking about the ORB, the opening range breakout, and how to improve your entries. Now, this is a video that's going to be coming your way probably in the next week or so. We're getting it edited and all cleaned up right now, so it's a nice tight presentation. But I'm going to really show you what's in the video today. The video will be a great way for you to learn because you can watch and rewatch and rewatch. But I'm going to talk a little bit about how to improve your ORB entries today, your opening range breakout entries today. Now, as we look across the markets, I don't really see a whole lot going on. We've got a little bit of movement in the US 30, US 500 sort of flat, US 100 flat, and we're deep into those dog days of summer. And with those dog days of summer, what tends to happen is we see flattened out price action. We see less participation from really big-time participants, and that essentially is what we're talking about here. So we've got a lot going on here. It looks like we've got a little bit of an issue here with our live stream, our description, and our live chat. So I don't know if our live chat is going to go ahead and be up on our platform here, and I don't believe that it is. So if you're watching me on YouTube and you can't see me on the live chat, that's just fine. We still have we got some problems with Restream.io. This runs back to the technical issues we had last week. So I will change the description after the live stream, but this is going to be about the ORB. This is going to be the ORB strategy. So we're talking all things opening range breakout. Hope everybody's dialed in and ready to trade. So for today, not much going on. I mean, realistically, not much going on. There's a few things that we need to talk about. There's a few other things that maybe we don't need to talk about. I touched on a lot of news yesterday, so we're not going to get back into the news cycle, the tariffs, the trade deals, all that stuff was sort of for yesterday. We're going to talk more about that tomorrow with our FOMC live installment, and that's sort of what we're expecting to have. Maybe nothing happen, but I'm expecting a lot of volatility after the release. I'm not expecting anything to happen before it. I thought today was going to be a pretty good trading day, and it is not. So Ralph H., good to see you. Ralph, Bobby Bob, good to see you. Tuku, welcome. Everybody out there in YouTube land, I just don't believe my live chat's working right now, so I'm going to have to go ahead and we're just going to do this one on the fly live, and we'll see if we can get anywhere, and I answer all your questions on accident. But I will show you how to do this. Okay, let me see. Bobby Bob, I just went through how to attach Pine Connector to my Switch account MT5, but it's not working. Would you kindly take it through us? You know, Bobby, that's a long video. It's about 10 minutes long. There's several steps. There's 3 steps you have to do to get up and running. You got to get the Pine Connector free trial. You got to contact live support there at Switch Markets. They have to contact Pine Connector to get you all up and running, and then after that you have to do the downloads and set everything up the way that it needs to be set up. So what I would say, Bobby, the best thing to do is to go back and watch the video a couple more times, and then you'll have a better opportunity to learn how to trade or learn how to get that Pine Connector up and running. If not, there's also a blog. Our blog is in the description. You're going to want to click on that, and it's got everything written up just like instructions, step-by-step instructions. So that should have you covered. If not, we may have a Pine Connector tutorial one of these days, but it'll take me too long to go through all that stuff, Bobby. So my apologies if you're not getting it to work. There are a few troubleshooting tips, though, that I have in the video that probably should take a good look at. So let me see. Ralph H., good to see you. Steve, good to see you. Lita, always a pleasure, Lita. Okay, I'm going to start off with a basic trade idea. This one's going to be coming your way later on today. I haven't written it up just yet because I want to see exactly how you have what price action you have. Dave F19, good to see you. Hi, Shane. You've been a busy man. Yeah, I'm a little bit too busy. I think we're having some technical issues over there with our Restream platform, and I'm not real happy with it. But that's life. That's the way it is. We're just going to have to go with. I like to have those descriptions up and everything locked and loaded, but it just didn't work today. So, yeah, I'm struggling with technical issues the last 5 days, and a lot going on, though. You're absolutely right, Dave. I am a pretty busy man. So let's take a look at this U.S. oil. This trade idea is going to be coming your way a little bit longer. Alan, good to see you a little bit later today. 38% is right around 68.99. I'll have a formal trade idea drawn up for this U.S. oil CFD a little bit later today, but I think that you all know me. You know how I like to trade, and typically that 38% is going to be a short. It's going to be a short trade, and right now I'm tinkering around with the entry. I'm thinking about which way really to play this. Are we super aggressive and maybe sell 68, 75s, or are we going to wait for really a hard test of this zone? I have a lot of confidence that we're going to get a negative bounce. I mean, this is just a 2-day range. We've traded inside of June 23rd and 24th range in U.S. oil for all of these days. So when I'm taking a good look at this, my biggest thing that I want to look at is what? Market state number one, are we going to have a breakout trade, or in fact, are we going to have rotational market conditions? If we have rotation, it's going to be a perfect trade, and it's going to be really tough to beat. So I'm watching this one closely. Let me see. We got a taker out in YouTube. Gus, no 9, 12, 20 strategy. I'm starting swing trading, and the crossover works really well. Thank you, Gus. I'm glad you enjoy it. The swing trading with the 920 is beautiful. The daily chart, the 4-hour chart, those are really, really strong. Those are really, really strong strong trading strategies, especially if you're doing it on the right type of asset. 4-hour 920, 9 EMA, 20 EMA, 4-hour chart on the Forex. It's pretty darn good. It's pretty darn good. All right, guys, let's take a good look at your MT5 platform. I'm going to go ahead and open this up for just a second because I do want to remind you that even though we are going to do it for the U.S. oil CFD, WTI, we covered this yesterday, on your Switch Markets platform, WTI will be the CFD that you trade for, WTI crude oil. And right here, 38%, you're going to see is right around that 70 area. So we're sort of making a break towards that zone. This late summer rally doesn't really surprise me too much, but just remember we are deep in the heart of rotation. And what we've got here is an opportunity potentially to sell once price gets out of disequilibrium. So we're going to have an opportunity to sell, and the big thing that we got to remember is we got to stay diligent and we got to stay patient. We don't want to get in too early. If we do that, we're going to spoil our trade. So that's going to be coming at you later on today. I'm going to go ahead and write that up, probably post it after the market today sometime later on this afternoon, so you'll have it for the London session. All right, everybody, let's go ahead and get on with the program here. Today we are going to be doing a workshop, an ORB workshop. So an ORB is our opening range breakout. Remember, if you want to trade this strategy and any of the others that we put out there, check out switchmarkets.com. They get you up and running and bring your ambition into focus. Now, right now, I've been instructed to sort of pass along the word that they have what's called, we're not really sure what to brand it and what to call it just yet. But what it is is it is, think of, it's a way for you to deposit and instantly be able to trade without passing the KYC process, which is know your client, and that's when you submit all of your information. The broker gets to know you, you get to know the broker. A lot of folks really want to dive in and start trading right away. They don't want to go through that process, and the Switch Markets has come up with a way where you can do just that. What you're going to be looking at is you're going to be looking at an aggregated wallet, or a segregated wallet, where your funds are going to sit, that you're going to be able to trade off of those funds immediately on a Switch Markets account. Now, your account won't be formally open, but you will be able to trade off of those funds up to $2,500. So it's a way that you can get involved in the markets immediately. You won't have to do much of anything but deposit your funds. Your funds go into that segregated account, and it's sort of like an instant trading, same-day trading, whatever you want to call it, and you're up and running up to about $2,500, and that is what a lot of traders really want to do ahead of getting approved by the KYC. So it's a way to get you up and running. Be sure to ask your customer support specialist about that if you are interested in getting sort of involved right away trading. Okay, this is the opening range breakout strategy. If you remember, these are over on our How to Trade YouTube channel. We've got a couple of videos out that we released. Not really getting many views these days, and that's just fine. But there's some good stuff there. What is a chart pattern? That's a good one. How to choose a trading strategy. That can help you choose a trading strategy. Trade the breaks, a real good strategy. Mario Singh, and it's just a pure intraday price action. Strategy, trendline, reversal trading, that's a good one. This is our Forex Orb video, which is fantastic. A lot of folks wanted a Forex Orb. We built one for you, and it's a pretty good one. It's got a pretty good strategy in there. This one's going to be your opening range breakout strategy in just under 10 minutes. So that video right there is what today's workshop is based on. It's going to be a pretty good workshop, I think. I think it's an opportunity for us to sort of kick the tires on the Orb. Today, what we're going to focus on is we're going to focus on the U.S. equities indices. And I'm going to sort of outline a couple of rules and ways that you can make your entries better, because we see markets that don't move in straight lines. The Orb is a breakout strategy. You're looking for the Orb to break and run. Well, that's not necessarily going to happen, especially in the summertime like we're seeing right now. So probably going to be looking at, we'll begin with the US 500, but we had a question from a trader earlier today that said, hey, listen, I'm short the US 500. I've got a profit target at XYZ down the queue. Does this trade have a chance of making it? And what I would say is we'll look at the Orb and we'll take a look at price action, and maybe we'll make it, maybe we won't. So that's what we'll look at here. All right, Joshua Chung, good to see you, Joshua. Gordon Williams, a pleasure, guys. Let's go ahead and get on with the program here. You can see trading the open and the close. What the opening range breakout strategy is, it's a way for you to trade right after a market open. These are the numbers that you need to be looking at for your all times Eastern. These are all Eastern Standard Time. It just translate. I believe it's a 7-hour difference between Eastern Time and I believe a 6-hour difference between Eastern Time and GMT. So you should be in the neighborhood there with those in GMT. Just make the translation for yourself and then look up GMT, and you can find out exactly what times these are in your neck of the woods. Now, the Tokyo Open, you can focus on the Tokyo Open, the London Open, or the New York Open. Ignore the New York close. We don't do that here, but definitely the New York Open and the London Open are certainly two opens that a lot of folks trade, and they base their trading decisions just on that. Now, the two-candle orb, if you remember, just a quick review, the two-candle orb is the first two candles after the open. I get this question a lot. Shane, are you doing the three candles? No, it's a two-candle orb. Okay, so if we open at 9:30 a.m. Eastern and we're using a 15-minute chart, we go 9:30 to 9:45, that's candle 1. 9:45 to 10, that's candle 2. So we're encompassing the first 30 minutes of trade. That's going to be how we make our judgment on which way to play the break as far as our orb strategy goes. You can execute this on any time frame. Just be forewarned that the smaller time frame you go, the choppier price conditions are going to be. For me personally, if you came up to me and said, Shane, what would you be doing on the orb? 30-minute chart would be my basis. I would consider the 15 just because you get to knock your risk down so much. So the 15-minute orb is a pretty good one as well. I would focus on the 15 and 30. I don't think I would go any longer than that, at least trading U.S. equities indices or even your London equities indices, something like the FTSE, something like that. You can do that. If you're trading Forex, I would really recommend a 30-minute chart being as low as you go, especially after an open. And remember, if you're going to do this on the Forex chart, what do you have to do to get your ducks in a row? After the Tokyo Open, you're going to look at your two bars. You're going to be trading what? Probably yen pairs, maybe the Nikkei. That's another good one there. London Open, probably pound pairs, maybe euro pairs, maybe things like the FTSE or the CAC 40, something like that, the German 30. New York Open, what are you looking at? You could probably be looking at the USD pairs, although you probably already could have been looking at those, but you could be looking at the US dollar. You could also be looking at those US equities indices. indices. Those are the ones we're going to cover today because they give us the most movement. All right, you're playing a breakout to a key level. So remember, the first two candles are our opening range. Our breakout is the next candle that breaks out of that range. It could be any time of the day. It could be 5, 6, 7, 8 candles down the line. All right, it doesn't have to be the third candle. A lot of times that third candle trades inside of those first two candles. So remember that. That's absolutely huge. That's our trigger candle. That's what gets us into the market. Once we get a close above it, we're looking to buy. Below it, we're looking to sell. Easy peasy, guys. Easy peasy. And then right there, it's ideal for equities, commodities, and it also may be applied to Forex pairs. Okay, so when we talk about how to improve our entry, which is what this is all about, there's two ways that I cover in the video to do it. All right, number one is the 50% rule. I know some traders that are already using the 50% rule. That's great. The second is Fibonacci retracements. If you guys know me, you're probably sick and tired of Fibonacci retracements. They can really help you target and maintain great entries, flip risk reward in your favor, and be dynamic with your trading. That's what I want from all of you. I don't want you to show up with a cookie cutter system, slap it on the market, and go, how come I'm not making any money? All right? I don't want that. Dynamic. If we're dynamic, our ORB number one's a dynamic indicator. Why? Because it focuses on price action. It's going to be different every day. I like that. That reflects what's happening in the market. The 50% rule, not as dynamic. It's going to be the 50% mark of your ORB. I'm going to show you that in a second. Fibonacci retracements, though, are all the way dynamic. They show you exactly where to buy or sell on pullbacks according to what's happened to price action with relationship to our ORB. I think these are two pretty good ways that you can streamline your ORB strategy. The only problem with these is if you wait, and both of them involve waiting for the price to come back to you, you're going to miss breakaway trades. You're going to miss those breakaway winners. But what you are going to do is you are going to be able to switch, really flip risk reward in your favor, and maybe, just maybe, maintain a lower winning percentage, but greater profitability. I'm going to show you how to do that right now. Let's get out to price action. Okay, right here, US 500. I was asked earlier today to break down the US 500. Let's go ahead and do it with an ORB. We've got a 15-minute ORB up here, or excuse me, a 15-minute chart, and we want our opening range breakout to be what? Based on our first 30 minutes of trade, our first two bars right there. Why extend it across the chart like that? Because in many cases, we're going to be looking for retracements back up into our ORB. I'm going to talk about that in a second. So, right there, opening bell, ding, ding. There's candle one, right there. Boom, right there. Second candle. Okay, that's big as well. What do you have going here? That's your range. There's your high, there's your low. That's the first 30 minutes of trade. That's your opening two bars. Okay, if you wanted to be a real stickler and say, okay, Shane, just show me the two bars, I'd say, okay, you can do that. I like to extend it across the chart. Why? That way I always know where my opening range is. Okay, number one. Where would we have entered this market on this trade? First bar close outside of the opening range. It's right there. It's close. It's close, but it still closes beneath the bottom of that opening range. That right there is going to give you the ability to go short. Right there, you're in the market. That's your trigger bar. That's your entry point. Where's your stop loss? Stop loss is right above the ORB. Not too shabby. What's your risk versus reward now? Got a couple of options with your profit targets. Number one, you could have shot for market structure. Maybe this liquidity grab down here that developed, that developed during the overnight, somewhere right in there. You could be looking at that. Okay, you could also be looking at potentially some lows. I mean, you could see where the weekly open. Maybe you're looking and shooting for Friday's low, something like that. You could do that. In either instance, you get filled up. Now, I get a lot of questions about this, and this is really what I'm going to tell you straight up. Your ability to identify risk versus rewards that are in your favor and your ability to stick in these trades until you get paid are what it's all about. It's going to be a function of you being able to hit your profit targets, being able to take your stops, and being consistent with your application of this strategy. That's all there is to it. In this instance, this ORB trade was pretty much good for a one-to-one. Very close. A lot of folks don't believe in one-to-ones. I got somebody that was yelling at me on YouTube the other day. I'm not telling you to stick to a one-to-one ratio. I'm not. But just understand this. A one-to-one is the base for what you have to shoot for. You can't lay more points than you take out of it. You've got to get at least one-to-one. That's called getting in and getting paid for your risk. at least a 1-to-1. Most breakout traders are looking for 1-to-2s, 1-to-3s, 1-to-4s, 1-to-5s. I had a gentleman yesterday tell me 1-to-7s are the way to go. Okay, great. The problem with the 1-to-7 risk versus reward ratio, and I'm just going to tell you straight up, when you get into rotational markets like we're seeing today, you don't have a chance. You'll hit them sometimes, but your ability to take consecutive losses going after 1-to-7, why stop at 1-to-7? Why not just go 1-to-10s, 10-to-1 moves? If you're going to do something like that, you might as well just trade on a news day. Trade like on NFP and wait for NFP to get a 5-minute range and then just try to play a break out of that. Because the 1-to-10s, they don't happen very often. And on an intraday basis, they're extremely rare. Swing traders, now that's different. Investors, that's different. You're going to be in the market for weeks, months, maybe years. I don't have a problem with that there. Intraday trading, very difficult to start hitting 7-to-1s. Now, you don't have to hit very many. You won't. You'll take a lot of losses. But that's something traders have to find out for themselves. So get in there. Tinker around with your risk versus reward. What are you comfortable with? Now, today what I'm going to show you is how to improve your entry point. Now, what we have right here on the US 500, we got a real clean break. Do I believe that the move is over? I think that it could be. You can see we went right down to Friday's low and we rebounded off of that. That key level, that would really scare me. I'm not sure that you're going to get any more bearish continuation underneath that, at least not today. All right, if we had a 1-to-1, this would be a winner. This would be an absolute winner, slam dunk winner. I like that. I like winners. A 1-to-2, probably down in here somewhere, and I'm just eyeballing this. Figure out the exact math for yourself before you take these trades. You could be down in here somewhere. Probably didn't get it yet. So if we want to improve our entries, and this is sort of a bad example because you did get a break, let's go to this US 30. All right, our US 30, it's similar. Let's go to the US 100, a little bit bigger break. Let's go to this US 30. So right there, opening bell, ding, ding. You've also got the second 15 minutes. So what do you have here? There's your range. There would be your entry point. Now, the real question becomes right here, and I get this question a lot. Shane, I got a big breakout bar. We broke out of our range. This would be our bar. By the book, that's going to be your short. That's going to be where you're going to go short in the market. All right. This bar is big. Is that a good idea to go short from this area? And I would say, well, number one, depends on where you think you can go profit-wise. And again, if you're shooting maybe your key levels down there at Friday's low, let's just use that as an example. Let's say that liquidity sweep right there is going to be our profit target. What's it going to take for us to make this trade with some confidence? We've got to have a better risk versus reward than that. If we sell right here and we're only shooting for something down in here, 44.65, look at what we're risking. Stop loss needs to be up above that ORB range for us to be sound, for us to have a sound trade. You could also bring it down right above your trigger bar. That's another way to do it. But look, you're still unbalanced. It doesn't work. That's never going to work for you as a profitable trader. You need to get paid at least a 1-to-1. I can't stress that enough. I cannot stress that enough. Now, if we're tick scalping or you're trying to get a sudden move in price, then that's something completely different. Then that's something completely different, and we'll talk about that on a different video when I'm saying, okay, listen, maybe if we're just playing timing trades and breakout trades, we can grab a few ticks with high leverage and not really worry about our risk versus reward. That's something different. I do a lot of that too. But if you're going to trade a system and a strategy, you better damn well have your risk versus reward idea in your head, know what you're going to do with your stops and your profit targets. It's non-negotiable, guys. These types of trades have three parts. Great entry, all right? That's what the ORB is going to give you, an entry. Stop loss profit target. On this type of trade, do I want to sell down here if this is going to be my profit target? No way. Now you could always say, well, Shane, I'm just going to extend and see if we can get a bigger profit target maybe and a bigger break. That's fine. That's fine. You can do that, but just understand that this big move here, you're going to have to make this up. So the market's going to really have to trend in your favor for you to get paid. So let's put it back to where it was, right around Friday's low, a nice conservative profit target. If this is going to be your original entry, where else could we go short at? The market almost inevitably moves against these big moves, almost inevitably. This is called the 50% rule right here. 50% is going to be very simple. It's going to be 50% of your range. Now you need to figure it out, not 450%, 50%. You're going to need to figure it out exactly. What would it be? Go from the high of your range to the low of your range. top of your orb to the bottom of your orb. What are you going to do? Find the 50% mark of that. And I'm just going to eyeball it. You guys can do the math on your own time. But right there, 50%. So what does that mean exactly? It means once we get a bar close outside of our range. Now, this is imperative that we understand this. Once you get a bar close outside of your range, that means that the orb's been broken. The breakout is essentially on. All right? Now, do we want to sell down there or maybe wait for a pullback? With the 50% method, you can wait for a pullback. So right here, where would be my entry point? I'm entering at 50% of this range. So as soon as price comes back to the 50% mark of my orb, then I'm selling. If I do that, take a look at what's happened to my profit target, my risk versus reward. All of a sudden, I'm risking maybe, as I say, 44,827 to 44,893. You're looking at about what? 66, something like that. 66, 44,604, somewhere down in there. We have a tremendous runner here. We have a big-time risk versus reward in our favor. Not bad. Is this 15-minute? Is this a great trade? I don't know. If we keep retracing, we're going to get a late-day action, maybe a late-day entry to the short. That may not be bad. What I like to see on this is, let's say, like this first bar goes down here, and then you see an immediate pullback to 50%. Then we're talking. Then we're cooking with gas, and it really does swing things in our favor. But this right here, you're going to look to make what is a 1-to-1 trade or an under 1-to-1 trade, give you an opportunity maybe to get in on, that looks like a 1-to-2 or 1-to-3. That's still doable. All this is a retracement during the mid-session and then a run at your lows. That's doable. So the 50% method is easy to remember. All you do to do this, first 15 minutes, boom, boom, draw your orb. 50% of that line is going to be your entry point. This right here is going to be your qualifier, a bar close outside of your orb, and then you're going to have an opportunity to look at entering right around that 50%. It's pretty good stuff. What else can you do with your profit target? Bring it up to a 1-to-1. Bring it up to a 1-to-2. Why not? You've already traded during this range. You've got a favorable risk versus reward. This type of strategy is how you can really make the orb sing, and you can make it sing in flat markets, which is what we're looking at right now. This is not a breakaway trend day. I know this break looks big and it looks like a big move. It is not. It absolutely is not. So when I take a look at something like this and I see something like this, my eyes light up because I know the options. We could play a conventional orb. What if I brought it up to a 1-to-1? Now I only got to get a little bit of retracement inside of my orb range. That's fantastic stuff, guys. That gives you a chance to trade your opening range. You don't have to rely on a breakout. You could get into rotational market conditions potentially and make a little bit of money trading rotation and not have to be the beneficiary of a 1-to-7 or a 1-to-6 breakout. To me, that's smart trading. The next question would be, okay, Shane, what is so special about your first two bars after the open? And I would say after the U.S. Open, the initial 30 minutes of Wall Street trade is absolutely hugely important. There's no question about it. That sets the tone for the rest of the trading day. If it's a great big range, then something like this is going to work really well for you. If it's a real tight range, then we might miss that breakout, and then maybe we just take the breakout to begin with. And that's going to be in a future video, how to judge your orbs and adjust your strategy accordingly. It's very, very important that you know how to use these strategies in every situation. This 50% way is a pretty good one. All right, let me see. Yes, sir. Good to see you. Yes, sir. Ordain, thank you for the session. First time here from Cape Town. Good to see you, Ordain. Welcome from Cape Town. Everybody's always welcome. We have a truly global audience here, and it's good to see everybody in there. Late to my strategy workshop. Going to have to rewatch this. Yeah, we're going over the orb. Now, that's just the first way. Second way that we can improve your entries is going to be Fibonacci retracements. Now, Fibonacci retracements, I'm going to show you exactly how to use them with the orb. It's very similar to the pullback to the 50. All you've got to do is understand that the levels are going to be a little bit different, and we're going to focus on levels that are inside of the orb. All right, let's go ahead and do it. US 100 15-minute chart. What do we got? What do we got for an orb right here? Let's see. You can always, if you got volume on your charts, if you put the volume indicator on your charts, you can sit there and go, okay, there it is, bang, bang. You know exactly when the U.S. Open was. Why? Because you see a spike of volume. This is the US 100 CFD. We're going to go right here from the top. Opening 15 minutes there. To the lower 15 minutes, something like this. And then you've got compression, compression. Where is going to be your entry? Conventional entry on this trade is going to be right here. First bar close outside of the orb. All right? Where's your stop loss going to be? It's going to be right up here, above the high of the day. Once again, you can see that's a tremendous risk. That's a big risk. We want to see if we can make that better. Want to see if we can make it better. Now, in order for you to execute using Fibonacci retracements, this is how you're going to be drawing them with respect to your orb. You're going to always work from the top or the bottom of your orb. That's going to be your anchor point, your 100% level. All right, now your 0% level is going to be the bottom or the top of the move, of the aggregate breakout move. Why do we want to focus on that? Essentially, especially when you're dealing with the U.S. indices, you're talking about retracements on the U.S. range. So this is the opening of the New York session, and you've seen this trade just develop through the entire thing. Okay, that's great. My Fibonacci's, I want to take a look at the range. Spike high, spike low. Top of the New York session to the bottom of the New York session. That's what we're focusing on. That's what we want. Now, the first thing everybody would say, okay, Shane, you love 38%. Should I step up and sell 38%? No. Not if we're going to incorporate this with our orb strategy. Now, you can see our original entry point is right there. It's right around the 50%. Which entries am I going to be focused on? 62%, which is a pullback back up into our orb, and 78%. Why? Because those Fibonacci retracement levels are inside of our opening range breakout. So right here, it's the same basic premise as what we just went over with the 50%, only we're targeting Fibonacci retracement levels inside of our orb. 50%? No, it's outside of the orb. I want to go inside of the orb. So if we pull back right there to 62%, you're going to look to maybe adjust your Fibonacci's, and let's just say you want to make a run at that low again. Now we're starting to now we're in business. Now we understand, okay, now I'm not risking as much. Now I'm not risking as much, and I'm getting paid a pretty good reward. Not bad. Not bad at all. Let's take a look at the US 30, see if we can build one out. Now that we already did the US 30, let's do the US 500. US 500 is going to be real similar to what we just saw. What would we be? Top of the orb, down to the bottom of the trading day. That's the New York session. Now, it could be the London session if you're trading the London session. Could be the Japanese session, whatever. The bottom line is you're looking for a big move. This works really well during the U.S. session for the indices. And then right here, 62%, is that going to be in play? Nope. It's beneath the orb. We're not interested. But Shane, I want to trade it. No, they pay us to wait. They don't pay us to trade. We want our entries. So if in this case we got to pull back to 78%, the door is open for you to adjust your risk versus reward any way you want it. A 1-to-1 is just right there. 1-to-2 is just right down there. If you want to make a run at the low of the day, right there. Now, given our setup today, these examples that I'm showing you today, this setup is going to be for late in the day. It doesn't always have to be that way. You could easily get an opening 2-bar and then maybe a big bearish close down here and then a pull back up into your range in the next 15 minutes, and then you could have a true day trade on your hand. That's fun. Then you have a chance really to take a position and get in on those 1-to-3s, 1-to-4s, and 1-to-5s. I'll believe that. I'll buy that. And the reason why I'll buy it is because our risk isn't that big. You can see we just have cut the distance down. Now, a word of caution before we move on. Trading is about giving something away today to get something back tomorrow. When you trade, you're giving away your money today to try to get back more money tomorrow or later in the day. Whatever. All right? That's trading. I don't care what strategy you use. It always has a soft spot. You're always vulnerable in a specific way. With the crossover strategies that a lot of folks really like and have had some success with, the 920, all right, the 5813, those crossover strategies are pretty darn good when the market's moving. When the market flattens out, you run into trouble. You're going to have more losers than winners. No question about it when the market flattens out. With the orb, okay, especially if you're going to use these retracement strategies to play these orbs, you've got to understand two things. Number one, your success rate's going to go down. Why is my success rate going to go down? Because you're going to miss those breakaway winners. The ones where you get your 15-minute 2-bar orb and then the market just breaks and goes in your direction. You're going to miss those. You're going to miss them because you're waiting for retracements. That's the first thing. So you're going to miss those. The second one is you're going to get in on more losers. And the reason why is sometimes the market reverses. I mean, hey, listen, if the right news item hits us late in the day here, this market could easily just close on the high. Our retracement level won't mean jack squat and we'll get stopped out. You're going to see more of that happen when you try to trade on retracements than if you just try to trade breakouts. However, on the good part, you're going to switch risk versus reward in your favor in a big way, and you're going to cut your initial risk down in a big way. You're also going to let the market settle down a little bit, and you're not going to get caught up in really some of the times the chaos of the first hour or so of the market. So there's a lot of reward here. There's a lot of good things, but there's also some bad things. The market can definitely blow up against you, and if that happens, you're going to get stopped out. But your risk versus reward, if you're a 1-to-1 trader, you probably could be a 1-to-2 trader relatively easily. Shane, what are the success rates? It's impossible to know that. Why? There's so many variables. Is it profitable? Depends on the size of your range, depends on your risk, depends on how the market flows. Do you think 50% of your orb is going to be profitable for you? Depends on your profit target. If you're a 50% trader and you're trying to hit these down here, you're not going to hit very many of them. What if you do this, though? What if you do bring it right back up and you're shooting for 1-to-1 trades from inside of the orb? Your winning percentage is going to be high. It's going to be high or higher than a 1-to-2 or a 1-to-3. So the sweet spot, I guess what I'm saying is the sweet spot's going to be in here somewhere. And that's why the back-tested results, I get that question a lot. Shane, what are the success results? What are the back-tested results? I am telling you, as someone who has done back-testing for a living, I find more problems with the back-testing studies that I've built than the value that they've brought me. I don't see any value in those big long back-tested studies now. Now we're moving into an era of AI where you're going to be able to sort huge amounts of market data, and you're going to be able really to see exactly what's happened over the course of history, and you're going to have a pretty good idea of what to expect on these trades over the long term, and that's great. And we're getting there. We're getting into that type of environment where the sky really is the limit for back testing. But I will tell you for a fact, the only thing that back testing ever did was it built me some wrinkles from squinting and doing hand-tested stuff all day long, but it also confused us. I remember as a trading group, 7V Bar, we did the back testing. We bought the data. We bought the CQG data, the databases, the tick data, all of it. We went through. We hired a programmer. We tried to sort it out, sorting out bad ticks, trying to get unique entries. We did it all, and we finally built this profitability matrix, which was completely garbage. It didn't work. Now, I'm not saying back testing is not valuable. It can be valuable. It will give you confidence to stay in trades when you need to stay in and get out when you don't need to be in there. That's great. But if you're going to back test, probably the most important thing you need to do is you need to figure out your entry points, your exit points, make sure that they're static, and back test for a given risk versus reward ratio. Don't just try to eyeball one trade and say, okay, well, it's an 80% winner at 1-to-1 or 100% winner at 1-to-2 or a 90% winner at 1-to-4. It gets too confusing. And quite frankly, we didn't have much luck automating those things. That's called optimization. A lot of folks believe that it's worth its weight in gold. It's not. I can tell you all that optimizing a strategy tells you to do is how to trade yesterday perfectly. Believe me, I watched the money fly out the window trying to trade optimized results. That being said, if you wanted to back test this orb and just get a general idea of what you're looking at, go through and start isolating orbs. Opening ranges, take a look at how the market's moving. Take a look at the breakouts. Take a look at the retracements. Try to get some tendencies. You could probably just go back for 3 days. I would say 90 or 100 opens would give you a pretty good idea of how things work. That's what I would say. But anytime you're maximizing your entries, you're getting the most out of your money. You're buying things or selling things at discounts, and that's fantastic. That's what we want to do, and it can really help you. That can really help you. Let me see. Alan, the fib levels are eye-opening. Yeah, I like them, Alan. I like them. I think that you could probably make a little bit of money doing that. I'm looking into it. I think that there's a million videos on YouTube about the orb. I don't like any of them really, but that's okay. Go out and check out a lot of other methods, guys. There's a lot of methods out there. Be sure to check them out. Let's see. I got way behind on the live chat, guys. Let me see. Ariang, sir. I am Ariang Panda from Mumbai, India. Your channel is great. A person like me really learns a lot from you. Thank you, Ariang. I'm terrible with the names. Anurang. Anurang. I really appreciate that. Thank you. We're here to try to help, and it's a lot of fun working with you guys, too. It's nice to be able to talk to traders. You are requested to make a detailed video on the practical uses of Fibonacci levels and how to draw them, etc., etc. You know, that's something I'm probably going to circle back around to. I've made some inside of our How to Trade trading room that you can check out. There's the Fibonacci Counterpunch series. Feel free to check that out. I made that a few years back. But you're right. I think we do need a new video on Fibonacci retracements that may be coming out in the offing here relatively soon. Let me see. John, what should I buy as a beginner? I'm really confused. I'm not really sure. What should you trade as a beginner, or what should you buy? If you were going to buy anything, and I got this question too. We have a young trader that's starting out, trying to get established in the market, and she reaches out to me regularly looking for certain guidance in areas. A lot of it's about buying programs, buying signals, and buying algo building programs where you can build your own algorithms and then automate your trade. That seems to be what's in vogue right now. The advice that I give anybody is, if it's affordable for you and it's not going to be too expensive, or it's not a stretch of your finances, then feel free to try some of those things out. I don't have a problem with them. I don't bury anybody. I will tell you that if you're buying a black box system, or a system that supposedly has a guaranteed winning percentage and they can show you everything, typically those don't last very long. The shelf life of a black box system is like 3 to 6 months. Something to think about there. Also, as far as the algo trading goes and all that, it is all the rage right now. Everybody wants to build their algos with AI. We have algobuilder.com. Clients of Switch Markets get that free. You're going to be hearing a lot more about Algo Builder in the coming months. But what's very, very important here is that you don't throw the baby out with the bathwater. If you're spending a lot of money trying to buy the holy grail of trading, I'm here to tell you that it doesn't exist. Now, you may very well get in there and be able to make some good money trading one of these systems. I'm not going to say that you can't, but understand that it's a real gamble. And last thing I'm going to say is there's a lot of scammers out there. There's a lot of scammers out there, guys. A lot of folks driving around the big jets, the Ferraris, the Lamborghinis. They're all making $25,000, $30,000 a day. I know of several that are social media influencers. I'm not going to name names because I don't want them to sue me. They have a lot of money, but I can tell by just watching their videos that they're hucksters, they're liars. They're more just personalities than anything. So if you're going to turn your money over to somebody for signals or algo programs or whatever, be sure of it and don't spend too much money doing it. I mean, if they want thousands and thousands, go in and offer them half of what they're asking. Say, I don't know, I'll give you $500. We got a deal? Why not? What are they going to say? No? So that's sort of up to you guys. Be sure, though, if you're giving your money, your hard-earned money away to somebody, make damn sure that they're reputable. Let me see. Ahmed, I found myself searching for every bad minor problem while testing. Bad habits happen. So I stopped testing. That's exactly right. I mean, the hindsight bias that we deal with is just human beings, and the way we perceive things goes back to our psychology thing that we did last Friday. You are a human, and the way that you back test is almost inherently flawed. I mean, it really is. It's really hard to stay unbiased. As far as automated back testing and Forex testers and things, they can be good, but you've got to be sure that the data you're pumping in is good, or else it's just garbage in and garbage out. You've got to be sure that your study is designed perfectly. You have to know exactly what you're looking for, unless your results won't mean anything. So it's back testing is hard. It's not as easy as people think. Believe me, I went down this road for 2.5 years by hand, and I felt like I was a gold pan or a gold miner. I had my gold pan, and I was just trying to find nuggets of gold in the stream, and I could never find them. And that's because the markets are so dynamic and they change so much that you need to be able to roll with the punches. That's why this entry video coming out, I like it. I think it's got a pretty good chance to really help some of you with the orb. That's for sure. Let me see, Daniel, why not split your position into 2 lots and take one at 1-to-1 and let the second one run? Absolutely, Daniel. Hey, great idea. Hey, listen, there's all sorts of things you could do. I mean, let's say right here, you say, okay, Shane, well, I want to make sure that I get in on the breakout, so I'm going to go ahead and take half of my position here, and then I'm going to backload the other half of my position on a retracement. I would tell you that you're adding to a losing position. You are, especially if you add here and then the price retraces against you. I don't particularly like that in the derivatives markets. Stocks are different. We can do different things with stocks. But let's say that you wanted to go ahead and add to your position just from up here, your initial position, and say, okay, I'm going to rock 4 lots. 5% of my account balance. I want to go ahead and sell 4 lots. I'm going to take 2 off at 1-to-1, and then I'm going to put some runners on. No problem at all with that. I like that. That's fantastic. That gives you a chance at the big money. My personality, I learned over the years, I just wanted to take what I was going to take right away. That's what suits me. So my 4 lots, I would probably just be looking to take my money right up front. Now, I'm not going to get in on the big runners, and people are going to say, oh, Shane, you left so much money on the table. I'm not worried about it. There's always more trades. There's always tomorrow. Believe me. I mean, there's always tomorrow until there's no tomorrow. And if there's no tomorrow, I'm not worried about it anyways. That's the way it is. Let me see. Yes, sir. If you trade on lower time frames, how can you determine if you're in a range-bound market? Absolutely right. That's a great question. Me personally, I look at the tote board. I look at the tote board, see this percentage change over here. Okay, negative 0.44, negative 2.3, negative 6, negative and a half. We're in rotation. We're not trending. We may trend towards the end of the day. Right now, the US 30 is sort of tanking, but you're still only down about 0.5%. I mean, a trend day for me is 2%, 1%, 1.5%, 2%. Do we get there? Maybe. It's possible. I doubt it. Maybe. But as far as on short time frames, how do we tell if we're in rotation? I look at the bigger picture. I know multi-time frame analysis when I'm getting involved, what the markets are doing. The US 30 coming into this, pretty good volume here. Nice big run up, but flat. And then we sort of had a decent, look at this though. This run up right here and then reversal. That's sort of really choppy, isn't it? Happened right around 45,000. Couldn't get established up there. Now we're selling off. So a lot of folks are going to say, Shane, this is a trend. And I'm going to go, no, it's not. How is it a trend? I mean, if you were going to say anything's a trend, it's an uptrend here. But on a 15-minute time frame, that's really hard to say. So to answer your question, yes, sir, I'm looking at my tote board. If I see that the markets are up 1%, down 1%, up 1.5%, down 1.5%, okay, I'm immediately thinking trend. Are we trending? And the other thing you can do, especially to sort of streamline your approach, if you're having trouble working that orb, that 15-minute orb, work a 30-minute orb. This 30-minute trade right here, boom, boom, it's the same trade essentially. You just gave it 30-minute blocks. There's your opening 30. There's your second 30. You gave it an hour. The hour, how do I know that that's flat? You've got an opening 30-minute, a retracement here, and then we traded a real tight second 30 minutes B period before we broke. That's absolutely rotation. Absolutely rotation. So to me, I mean, that's a pretty 30-minute orb. There's your breakout. And if you're trying to trade retracements on this, you didn't get them. The market's coming off. What's happening with the US 500? Same type of thing. We're moving down now. So like I said, it's going to be one of those things that there's trade-offs. You give a little here, you take a little here. The one thing you will miss trying to trade improve your entries on the orb is you're going to miss the breakaway winners. And this is one of those situations where, yeah, it really never did get back up into our orb and it's just trending down. That's fine. You can't get them all, guys. If you want to be a pure breakout trader, go for it. Just trade the orb as is. If you want to improve your entries, and to answer your question one more time, yes, sir, a flat market, let's say we have a 15-minute orb, and this thing just sort of trades inside of our market for most of the day. That's a pretty good indication that maybe we're not going to break. Maybe we don't get a break until the end of the day. Interesting stuff. Orb's a fascinating strategy. A lot of people really love it. A lot of folks on YouTube say that they're experts, and a lot of folks are. There's a lot of different ways to build those opening ranges. I showed you one right there that really goes back to the pit days. Typically, they didn't use 15 minutes. They used 30 minutes back in the pits. They would watch a full hour of trade up on the big board, and they would establish their range. And remember, there was no real charts or anything. They were just writing down the highs and the lows on their pads, working out some basic range numbers and trying to figure out, okay, are we going to go down towards yesterday's low or yesterday's high? Are we going to break towards? What are we going to do? And then they would judge the sentiment in the pit. They would judge the buzz. They would see who's buying and who's selling. They'd be watching what the institutions are doing. We can't do really any of that. But what we can do is be technically sound, understand our news cycle, understand our key events, and then we have a chance to trade. So there's a lot going on here, guys. I like the orb. I think it's a fantastic strategy, and that's one way that you can, or two ways that you can improve your entries. Hey, Sahil, good to see you. Hey, buddy. Good to see you. All right, guys. I'm going to go ahead and sign off here. Okay, I got one more question from Alan, then I'm going to sign off. Shane, what's your opinion of the dollar franc daily chart at the minute. 13 EMA. All right, let's go ahead and run it. Dollar franc. We're getting toward a kill zone. So there's the daily chart right there. You can see that it's almost a Bollinger W. There would be your initial bearish move. I guess I could pull the chart up. Initial bearish move right there, and then there's your pullback right there. This maybe you could say that was a bid right there. That's sort of tricky. That would be your second low, or you could do something like that. Is it bullish or bearish? I mean, you're definitely seeing the U.S. dollar make a move right now. You're welcome, Bobby Bob. You're seeing it make a move. For me, spike high, spike low, pullback. 81's going to be big for the franc. 81's a big deal. I would be watching that relatively closely. If I was trading this dollar franc, that's going to be pretty good resistance up there, about 81-ish. As far as the daily time frame, you probably could be a little bit bullish here if you wanted to buy pullbacks. Just keep your profit targets under control. You know, you realize that more than likely this market has a lid on it at 81. Now, going into the Fed meeting, we really don't know, so you got to be careful there too. But this 4-hour chart, let's see your low there, 25, something like that. I mean, that's sort of your spike low. I would much rather be working on this wave here, something like that. 82 and a quarter, or excuse me, 80 and a quarter is probably a pretty good buy, I would say, somewhere right in there. All right, everybody, I'm going to go ahead and sign off for a while. Let me see. Caesar, thank you, from California. All right, well, I'm up in Dillon, Montana, so I'm about, I don't know, off of I-15, I'm probably 10 hours north of you, 12 hours north of you, maybe further. No, it's probably 9 hours from here to Vegas, so yeah, I'm probably 12 to 14 hours, 15 hours north of LA, something like that, depending on how fast you're going. You're absolutely welcome, Caesar. Okay, guys, I'm going to go ahead and sign off right now. We've gone way long. We've got a lot of other fish to fry today. Let me see, sir, according to you, which country is a Forex crypto trading friendly country where the tax and regulations are traders friendly? That's a long question, Anurag. I would really have to look into that. I know that the crypto sphere is changing dramatically here in the United States. The tax situations are changing and everything, so you got to be real careful. That's a great question, though. I'll have to look into that and maybe get back to you tomorrow. All right, guys. You're welcome, Lita. All right, everybody. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.